Have you ever wondered why gold, an ancient form of currency, still holds such a lure in our modern financial world? Why in times of economic uncertainty do investors turn to a shiny metal that has no intrinsic productive value? The answer, as it often does in finance, lies in the complex relationship between gold and inflation. Inflation, as you may know, is the gradual increase in prices and fall in the purchasing value of money. It's a silent thief, eroding the value of your hard-earned cash over time. So how do savvy investors protect themselves from this financial pickpocket? They diversify their portfolios, and one such diversification strategy involves investing in gold. Gold has a reputation for being a reliable store of value. Unlike fiat currencies, which are susceptible to inflation and can be printed on demand, gold is a finite resource. Its scarcity and universal appeal make it a robust hedge against inflation. But how does it fare when compared to other investment options? Consider the stock market, a popular choice for investors. While stocks have the potential for high returns, they are also vulnerable to inflation. As living costs increase, consumers spend less, businesses make less profit, and stock prices can fall. Bonds, another common investment vehicle, also have their drawbacks. Inflation erodes the purchasing power of the fixed interest payments that bonds provide. As inflation rises, the real return on bonds decreases. Real estate, often considered a good hedge against inflation, isn't immune to its effects either. While property values may rise during inflationary periods, so do the costs associated with owning and maintaining properties. So, where does gold fit into this picture? When inflation rises, gold often shines brighter. It has historically maintained its value over the long term, and during inflationary periods, gold prices often increase. This makes gold an attractive investment option for those looking to preserve their wealth in uncertain times. In summary, gold's scarcity, its universal appeal, and its historical performance during inflationary periods make it a compelling hedge against inflation. While other investment options like stocks, bonds, and real estate have their merits and demerits, none provide the same level of protection against inflation as gold does. However, it's important to remember that investing in gold should not be a standalone strategy. It's a part of a diversified portfolio, a piece of the puzzle in the grand scheme of wealth preservation and growth. So, next time inflation rears its ugly head and you're looking for a safe place to park your money, remember the allure of gold. It's not just a shiny metal, it's a time-tested financial shield, a stalwart protector of wealth in a world of fluctuating currencies and rising prices. The story of gold and inflation is a tale as old as money itself, and it's one that's likely to continue for as long as we value this precious metal.